I'm Debbie Bell-Hosking for FinextraTV here at NextGen Nordics 2025 in Stockholm. And I'm talking to Patrik Havander of Visa. We're going to be chatting about cross-border payments. Patrik, welcome to the event, welcome to the studio.
Thank you, Debbie. It's nice to be here.
And we're talking cross-border payments. So let's dive straight in because it's a big topic here at NextGen Nordics. Would you say that consumer expectations when it comes to cross-border payments is more advanced than what the industry right now can provide?
I think it's a very good question, Debbie. I think it depends who you ask. I would say from a bank perspective, the demands are higher than the banks can provide in general, I would say. This we can see in statistics simply, that we can see that banks have lost out of almost 50% of the retail volume of P2P cross-border payments. And this is of course alarming. It's not a huge volume for banks, but it's a very profitable business.
And what about fintechs? How are they meeting that divide between the consumer expectation and what they can deliver?
Well, I mean, we can take a step back and look at the G20 directives or the Financial Stability Board work, the payment roadmap. Cheaper, faster, more accessible, more transparent. I think the fintechs are able to provide that to the P2B market. I think also in the banking industry, there are a lot of bankers, if I ask them directly if they are using fintech alternatives to move their own money, there is a quite big show of hands in that.
And what's the impact on the discussions we're having on B2B payments?
I think B2B payments are more complex, and they are more important for banks because they are connected to a lot of ancillary business, the so-called house bank effect. However, we are seeing now the same trend as we saw 10 years ago on the retail side. We are now seeing the same trend on the SME and the mid-corp payments as well, that it is gradually disappearing to the fintech providers for the same reasons. There is a big consumerization trend going on also in the B2B payments. This is also very much linked to that. Also corporates are changing. They are going from analog business model to digital business model, more or less. Many of them are becoming giant e-merchants in a way. And this changes the demand for payment products, really.
Now, Patrik, let's go on to regulation, because we talk about organizations changing. They have to change. Do you think organizations are becoming more regulatory compliant ready so that they can now consider focusing more on innovation or customer experience? Do you think that's happening yet?
I'm sensing by your question that they are becoming more optimistic towards the regulatory.
Is that optimism there about regulation?
You know, I would say there was a high optimism in banks for PSD2, even though that was created, really to fuel competition towards banks. But banks saw also this as an opportunity for third-party development and things like that, and sandboxes and all that. That didn't really materialize. It has been a huge regulatory burden, I would say, and the optimism then did not really play out. I think the verdict is still out. I think there are still hopes that this will happen. If we look forward, what I'm seeing is that it's creating IT backlogs really for banks and makes banks unable to focus on the more innovative things that they need to do in order to stay relevant, competitive, and have a strong resilience towards the increased competition. And it's not only from the competition is not only from the fintechs, it's also from global banks. Increasing their scope in the corporate marketplace or the retail business.
And Patrik, you spoke there about remaining relevant or staying relevant. How fluid does an organization's cross-border infrastructure need to be going forward?
I think it is super fluent, or you need to have optionality. I think optionality is the word of the day. You need to have a very clear strategy on where to build, where to buy, where to partner these days. And you need to be able to do it quickly. You need to adapt very fast because the market is changing extremely rapid now. I used to say that transaction bankers are a patient breed, and we wait for a long time for a change to happen. We can just say ISO 20022 took quite many years to happen. I think those days are gone. The rate of transformation will be much faster here, and if banks are not fast to change here and to make sure that they have competitive solutions for their cross-border offerings, that volume will gradually disappear, and suddenly there is then a big loss.
Taking into account everything we've discussed, what is Visa doing in this space?
We are, Visa have been a leading card company for the last 60 years. We are now taking these 60 years of experience of building robust, resilient, secure infrastructure for banks and financial players. And we're taking that into also the other parts of the payment business. So Visa is not a card company today. We're a payment company, and we are then providing banks with the optionality of, depending on your strategy and your geography, that you can then pick a proprietary solution that supports your strategy, so you can be competitive and build build business wherever you intend to.
That's interesting. I'll remember that. So you're talking about Visa no longer being a card company, but a payments company. And on that note, thank you so much for joining us. Have a great event. Lots to discuss. Thank you, Patrik.
Thank you, Debbie. Thanks for having me.